It's Brian Preston, the money guy.
This next question is from Financial Bootcamp. So they said, I have a $20,000 emergency fund and it's gaining 0.4% interest. Would it make sense to use it to max out my wife's and my Roth IRA? If we need to withdraw principal, it's not penalized. Okay, yes, that is true. If you put money into a Roth IRA, one of the dirty little secrets is that you can always get to the basis, the money you put in, penalty-free and tax-free. However, you don't want to make a practice of doing that. That needs to be like a last-ditch, last resort, last thing. Well, here's the problem that I would think about. When you go to take that money and put it in the Roth IRA, what are you going to do with it? You're going to invest it. And if you've heard us talk about like asset location, if you're at the point in your financial career where it makes sense for you to be thinking about that, your Roth is probably going to have more aggressive assets. Or if you're a younger person and just starting out, it's going to be in a pretty aggressive target retirement index fund. Well, what most likely happens is when bad things happen, they don't all happen in isolation. They kind of happen all at once. So what if we see a really severe economic downturn? And not only does your pay decrease, or even worse, maybe you lose your job, but also the markets get hit really hard too. We saw this happen in 2008. Well, now not only did your income, the thing that's allowing you to put money on the table, go down, and the reason you carry an emergency fund actually got triggered, but now also that emergency fund that you kind of had closeted in your Roth has also lost value. So the thing that you really have to assess is, what should my true emergency fund be? And if $20,000 is the number that you need to get you to 3 to 6 months of expenses, I think you have to be very, very careful cutting that in half by taking $12,000 out of that to fund Roth IRAs, unless you know that in the next few months you're going to get a bonus or there's going to be some inflow where you can replenish it. I would be hesitant to do that. Now, if you're someone who keeps a little bit of extra cash, maybe you're at the 6, 7, 8 month of reserves, and you're thinking about using that to shift in, I do think that's okay, but I don't want you to be so lean that you leave yourself incredibly exposed, because the reason you have an emergency fund is in case of an emergency. And the thing about emergencies is we never know when they're going to happen, so you have to make sure that you are prepared and ready for that when it comes.
I'm going to give them credit that these are financial mutants asking
Oh,
the question.
yeah, for
and
sure.
Look, I have been in the situation where we're not, because I think you're kind of saying if you can do both and it's just a lifestyle thing, do both.
Sure.
But there have been times in my own life that it's a binary decision, meaning that if you don't go use that money out of the cash reserves, you just don't get the Roth contribution for that year. It's either a 0 for no or 1. This is the only way I can fund it for the year. Now, I want to give credence to what Bo said. You have to, if you do this because you're quickly approaching the April 15th deadline, you want to get that money in because you know how powerful Roth is. I'm okay if it's a binary decision. It's the only way to do it, because you do get that nicety that you can get access to the principal. But you better respect what Bo's saying, is that you need to be able to replenish that money, because maybe the only reason that this is the only way pot you have the money is because you're young and you've only started saving in the last 2 or 3 years. I would do it because, and I know that sounds a little counterintuitive, but
I like that we disagree.
But you know, reading some of my history, because we're working on a project right now.
Yep.
I tell you, one of my biggest financial mistakes of my life was, I think if you looked from the creation of Roth IRAs from 1998 to now, there's a little over $10,000 that I have not funded. That $10,000, I'm nerdy enough. I went and calculated what that $10,000 would be worth based upon my age, and if we just put it in an index fund. I mean, it's now, I think we're over $50,000 worth of value. I regret that. I mean, it really tears me up. Now, look, it's not like it's going to keep me from retiring, because, I mean, now once you're a financial mutant, you're still going to have success. It's just what level of success you're going to have. But it bothers me that that's a blocking and tackling thing that I probably should have squeezed somewhere else in my financial life to make it happen. So that I'll give them a little grace on that standpoint, as long as you're doing everything else that Bo told you, and you understand that this is just like debt's a dangerous tool. You got to treat it like a sharp knife. If you are going to fund a Roth IRA with money that should be cash reserves, be scared.
Yep.
Measure twice. but I'm going to give you permission if it's a binary yes or no. This is the only way you can get it in, so you don't have those regrets like I've had as an older investor who missed out on getting every dollar of Roth money.
And then, as soon as you get that emergency reserve built back, try to start saving on a monthly basis rather than finding yourself at the end of the year and, I got to come up with $12,000. Set up $500 a month to your account, or $500 and $500 to you and your spouse, and it's just going to make that a whole lot easier. Figure out where you can squeeze, give up a little bit of today for that great, big, beautiful tomorrow.
Love it.